Hey, good evening, folks. Kunal here, Bulls on Wall Street. Hope everybody's having a wonderful weekend. And guess what? It's time to get to work. Market down a couple percent last week across the board. Russell 2000, S&P 500. A couple things to really keep track of. Number one, obviously, the breakout to highs is now a failed breakout, and so that's really killed the main bullish pattern that we had going. So we're going to have to really take an eye and keep an eyeball on. At this point, we're kind of in like a little bit of a no man's land. We don't have necessarily any immediate bullish or bearish setups to give us, a straight up catalyst in the market. We're not oversold. We're not on, some monster level of support that typically, propels us. And so we're in a little bit of no man's land. Yeah, the breakout to new highs failed. That can happen. Sometimes, but we don't have necessarily any big bearish pattern here yet either. And so we need to see kind of how these things will play out this coming week. If you look, at the market in general, we are at a fairly key level of support here. And so we'll see we'll see if this holds in the coming days. If it doesn't, this kind of area right here, then probably a tap back to the 50-day moving average will be in the cards on the S&P, and that might be the spot where we start to see some action. But historically, in this last big bull run here of the last year or so, the 50-day moving average. It's got defended a few times, right? But oftentimes we just break right through and then we sit back above, and so that might be the play right there. So let things wash out and then play the rip back above. In terms of the overall market, one of the things that we noticed last week, especially Thursday and Friday, was that a lot of our setups were really breaking down, and so you got to be careful when you're trading tomorrow to make sure that you don't chase strength up too much, especially if the market's flat or weak. I did that on Friday and got burned a couple times. Some of the patterns that you use when the market is flying, that doesn't necessarily hold if the market's under pressure. Some of those quick pops and flags, they get shorted or they break down really quickly. And especially if you're trading lower float stocks, even if they're $40, $50, $60 stocks with a lot of volume, they can really rip down to the downside dollars, in a hot second if support doesn't hold or if that early morning strength doesn't hold. And, I lost a couple $1,000 in like 20 minutes on Friday. I mean, it was insane. If you chase too high, you really are in danger. So make sure you get good prices. Stick around those consolidation areas and stuff like that. That's going to be a big help. Let's take a look at the watch list. I really like how this CYNI is shaping up. We've got a base breakout and kind of a flag here around this 4. So watch this $4 mark. I probably won't take a trade like this unless the market is flying or really strong. Sometimes these turd stocks, they just get walloped or the breakouts fade really, really fast when the market's in flux. BIOF is another stock like that. Unless the market's really hot, I probably wouldn't take this flag pattern, as you'll just get a pop and a fade on it. But, if we start to bounce, a Monday or Tuesday, then that might be a good play. GMCR, really nice day on Friday. I'll be looking for continued follow through throughout the week to see if we get a run back to this 120s mark. Cray, another stock that's held up really, really well over here. This could be a stock that probably breaks up to imminent highs anytime. Zillow's working on kind of a longer term breakout over here. It's really been consolidating, right, for 6-7 months here in this range, and we're starting to kind of test the upper end of it. And if that happens, you're going to see a really quick run to $100. Really one of the strongest stocks, right, on Friday. IPXL, this $28 mark is a really important, strong day for it on Friday. You can see on a longer term basis, right, this stock is breaking out to levels it hasn't been in a long time, right? This is all-time highs right here. And so it's sneaky style just creeping up here. But, a breakout of this area could really, really send this thing for weeks. So keep an eyeball on that one. Cooner, this is a stock that really ripped to highs and had some nice momentum, and then a failed breakout. It's come right back to support. This stock's dropped, $7-8 here. You'll tend to see if the market rebounds, you'll tend to see these stocks that really got walloped really have nice bounces. Fang, same type of thing, right? It ran into 52-week highs and couldn't hold it. Now it's kind of coming back to support. So if the market starts to bounce, this will give us really easy kind of low risk entry on that. Take this one off the list. Dun, 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 off the list. ARTX, big run. We shorted this rubber band setup for the snapback back down. Now it's starting to get into an area where we might see some bounce. You can see this $4 mark seems to be a key level. If not, watch that 20-day moving average. CRTO, after the monster run, we finally cracked that $10, $12 drop that we had been looking for. We were talking about this, right? Last week and the week before, that we were entering kind of a big rubber band setup here, as it hadn't had any rest in weeks while doubling in price. And so now we pull back to support. See how we're starting to round up here? If we kind of come out of this range, we might hit right back to $60. SPLK, this has been really one of the big momentum stocks of the last year. And, it's had a lot of volume distribution. It looks like a little bit of volume distribution on this pullback, so that's something to be aware of. But I do like the location here, with a couple of levels of support defending it. When you're playing bounce plays, some of the things that you got to do is, if the bounce area doesn't hold, then you look to the next one, right? You take a small loss and you get out, and then you rejigger it and try to play it back to the upside, because when you do hit it, right, your reward to risk ratios are such that you can get a really big rip, but you might have to take a couple small losses to really find your ideal entry. Coors is a stock that's flagging right under 100. You might see a $100 roll on this thing. Moby, really strong stock. Every time this stock dips, man, it's getting bought up with some gusto. A lot of volume in this stock. I like this name a lot. KNDI, after the big rip, right, a nice tap back to the 20-day moving average. This stock, if it can hold and the market bounces, you should see it run back to 20. SCTY, all these solar stocks are really, really dumping. So, if they continue to dump next week, you might see a break under the 50-day moving average for a quick flush on this one. They are all oversold now, so if you start to see the bounce in them, then, right, you've got an easy location for a long on this. And then Dang is another one, right? After this big earnings plan, this huge volume push, right? Just kind of an easy-go-lucky pullback. Really only a couple bucks after such a run, only pull back a couple bucks is pretty positive. I would keep this one on watch too for an imminent breakout, re-break at some point. So that's it for now, guys. Let me know if you have any questions on anything, and I will make sure to hit you guys up. Let's kill it next week and keep this thing going.